So it's been a bit kind of as expected. If you guys remember last week, the bias, well, not the bias, but the short-term, medium-term bias was essentially short-term bullish because of this, pretty much this, I want to say intrusive. I don't want to say intrusive, just say this, pretty much this momentum that appeared almost out of nothing, out of thin air. So because there is strong momentum, that is given to me a sign of potential reversal. And not only that, but we already caused the internal liquidity grab that we mentioned. So it was only natural for us to think that this preliminary structure break could be a sign to give us short-term momentum into the upside, into a potential premium, right? Because our overall bias is still bearish, right? Obviously this, is hard to predict. This is not a POI, this is not anything like that, because for example, it's not just about the POI present, it's about how price reacts to the POI for one, two, what it does in order to reach there, right? Because a POI can be invalid if because of structure rules. So I do want to see how deep of a retracement we will go, but something to note here as well, right, is we didn't react from anything. We didn't react from anything. If anything, the only thing that occurred was we took liquidity, right, gave us that potential sign of weakness to the downside, but then immediately took out a preliminary high, causing a liquidity grab to the upside. But now we are stuck here. So because we are stuck here, it is now essentially stuck in a range. Why? Because this pullback, solidified high, did not create a new low. And the potential reversal, right, if this takes out preliminary structure even here, then this is now unwillingness based on the upside. So it's now kind of no man's land in terms of a medium term scale. So it really just depends on how we react from an intraday perspective today. And by that I mean, sorry about that. By that I mean here. So if we are to continue higher, right, which I do want to see us continue higher, I do want to see us reach an overall premium in terms of our internal structural range here and here, right? So let me actually delete a lot of these. Okay, because I want us to acknowledge the current structural range that we are essentially inside of right now. Right, so our final solidified high based on here is now our last structural point to the downside, because this is the first time we see any type of bullish push to the upside, causing the reaction that is currently going on right now. So when we're looking at this now from a bias perspective, the bias hasn't changed. The bias is still bearish. Why? Because of everything we mentioned last week. So the only thing we can do is hope that we continue higher, which I'm pretty sure we will, because we did break preliminary structure. That is what I'm counting on. In terms of how long it will take, who knows? But if we continue higher, I would like to see liquidity be cleared. Why? So now we have a reason here to look for that reaction, because in order for us to get back up here, this needs to be bullish. Our short term or medium term needs to be bullish, even though our overall is still bearish. So any transition here even if our minor intraday is still bullish, is in harmony with our overall structural range, which justifies a bearish potential. So that's pretty much kind of what I'm looking for. I don't necessarily care where we react. I just care about how we react and when we react. And those are pretty much the two components that matter to me at the moment. But just referencing this with EU, super sloppy as well, right? Like we said, we anticipated a potential continuation, which is exactly what happened here. But then we had an internal disruption causing bullish momentum to the upside. But as you can see here, that M30 wick, right, is causing, M15 wick even, is causing a reaction, but then we came to tap again. And this second tap does not make sense for me from a mitigation perspective. So, because the mitigation, this potential mitigation does not make sense to me, it might not be a mitigation. So, this move to the downside could be unsustained, which is also a potential reason why we don't see strong supply. So strong supply is not in play. Structure is still bullish from the overall scale. Right now, we're just looking at potentially achieving any type of equilibrium, any type of discount, right, to then give us, you know, that upside momentum. Because it's very possible that we could even reach, let me go to M30. Yeah, that we could even reach back down here. Why? This is an inefficiency fill. This is where pretty much the news event came, and this is where the strong move to the downside, which led to the upside move, occur. So it's very possible to see that come back into play. And yeah, the only issue with that is it's hard to set a limit here. Because like I said, in order for us to reach here, we need bearish structure, bearish minor intraday structure, even though our major intraday and our swing could almost potentially be considered bullish. So from an overall scale, right, technically still bearish, technically, just because of how strong momentum is to the downside. And this is the first time that we're seeing bullish signs. So it's only the pullback of the full leg. So, but now the only thing is this is taking so long to try to reverse, giving me a potential sign that we're looking at a very big move to the upside, right? Because I said these transitions are where we get these but these very large swings. And this is essentially where you get those 300, 500 pip swings because you catch something in a transition. And the cool thing, you know, like I said with the video, if you guys saw one of the last pair breakdowns, which was pretty much this EU breakdown, is that this transition, right, where it was here, is going to take a long time, which is why you could see it took, to even give a reaction, it's took 10 days, 2 weeks, right? Like I said, this reaction wasn't going to be quick. And as you can see, this honestly is giving me a feeling very similar to, let me see if I could find this. Let me see if I remember exactly where this was. Kind of, I don't want to say here because I remember there was a moment where we cleared liquidity from news and then essentially gave a bullish move. But either way, the principle is applied here as well. Where is this? Right, transitions take a while, right? We had a bearish break of structure, transition took its time. Although this is way smaller because this is more so a recollection, a reaccumulation, whereas this is a full-on reversal, right? For example, another reversal here, same principle applied, right? We are bearish, so the transition takes time. See, this took 45 days. This took 29 days, 30 days, right? Which is why I said these moves take a long time. Hence why I'm not in a rush for this. I'd rather wait for the best possible opportunity to then give us, you know, that strong push to the upside. Because there's two scenarios. There's the discount, right? But the discount could be considered a bit deep, and any type of break could actually be a reversal. Whereas the second potential bias could even be you can see that inefficiency in play. You can see that there's liquidity sitting right above it. So who's to say we don't take liquidity and just continue there? Why? And the only reason why I'm considering that is because we have a very strong push while we have a very weak correction, right? So low effort, low result, that equals a pullback. So any push to the downside could also signify a type of, I don't want to say reversal, but it could be alerting, because you would be trying to pick a low based on your smaller time frame. Let's go to 15. So as a whole, right, we know where the bias is. It's just a matter of when we are going to reverse, right? So we have the potential inefficiency here. There's even another inefficiency here at 48.3. Although these are relative equal lows, I don't see them as a target if we start reacting from here. But if we don't see any reaction from here, then this should probably be taken out. But yeah, this has been super sloppy. I haven't even touched this, to be honest, just because I want that premium in DXY and I want that discount in EU, right? Looking at AU, right? So remember what we had essentially discussed here was the fact that we had a bearish push, right? And the bearish push was going to result in potentially a potential redistribution to the downside. But you have to actually analyze what's happening here. Right, so we can see the reaction in play. Let me delete all of this actually. We can see the reaction here. We can see the continuation want to show itself here. This looks more like an M30 POI. Yep, M30 wick, precisely there. Okay, so the reaction is present. The solidified high is present. The bias is present. But what occurs? 1, 2, 3, 4. That's weak order flow, right? That's all these pushes, right? That did not lead to a new high. So the bias is still sustained. But was this, I believe this was a news event. Was that a news event? Let's see. Was that this? Yes, it was. Yep, so we had this going on last night. And that was the catalyst to cause the disruption, to cause the break of structure, and which is essentially changing the entire bias. So up until this point, this is still bearish, right? Because you could even see, if we're wanting to zoom in, we could even see the fact that we reacted. Same thing that's happening here as a whole is happening here. Solidified high. This led to a liquidity grab, internal disruption, more internal disruption in terms of the whole range, right? But what's important to acknowledge here is the fact that this momentum cleared structure. So because the structure right now even tried to continue, because this is kind of what I'm anticipating with EU, and this could easily also start rocketing from there. But the thing is we have our low and we have our high, right? We now have bearish structure in play, right? Even though we see solidified points, right? I'm acknowledging the fact that we created a bearish structural range that cleared structure. Because this cleared structure, this is technically now bearish once again. But the thing is I'm not trying to chase this trade. I'm not trying to chase this to the point where I'm trying to take this to make new lows, and I'm not trying to chase this for this to make new highs. Because we have such an uncertainty, with direction based on here, the unwillingness, then the break of structure, then this, the continuation, then the potential move to the downside, which failed, and then caused an internal disruption, which makes us bullish, and then now the bearish structural range that makes it bearish. That makes this super unclear. That makes this technically no man's land, which is why I don't really want to touch this. But for now, the only reasonable thing I can do is play based on the immediate range, which is why we could even potentially see the continuation lower because of the break of the immediate break of structure, right? So this immediate break of structure could also signify the fact that we just have liquidity here and that we are having a liquidity grab play and the mitigation to the downside. That's the only bias that makes sense based on the current information in play. But either way, because it's been doing the same thing over and over again, who's to say this doesn't transition once more and then now it becomes bullish again? That's the issue with trying to play these ranges, because even though you can only rationally play based on the immediate leg, the immediate push, the immediate mitigation, right? Just as easily as we are transitioning back and forth in no man's land, it's just as easy as it can continue to. So because it's just as easy to continue to, it makes your risk a whole lot less, I don't want to say rational, but a whole lot less uncertain, or a whole lot more uncertain. Sorry about that. Because there is no clarity. And that's pretty much it. There is no strong clarity. So it's until you see that strong clarity that you can take a conservative position. But if you want to be aggressive, then you could play inside of the range. But as long as you acknowledge your risk, everything's all right. Last one, GU. This one I haven't even looked at, if I'm being honest. But I believe we did say that we could be, even though we are still fully bullish, right? The current structure is bearish in terms of short term. So our medium term structural range is still intact, but we are seeing minor intraday breaks of structure. So the minor intraday break of structure is making this also uncertain. So although the overall play is the liquidity grab, we know that the only way for us to continue to be bullish is if this coincides with the bias. So because we are still bearish, it is still kind of tough to make that judgment. But either way, I mean, I think we're still going to continue this week, especially looking at the XY, looking at this. Right, we have the potential reversal pattern, blah, blah, blah. We actually had a monthly closure as well. And that monthly closure is very bearish, right? So you guys see that, you see why my bias is as is, right? And the next potential area of interest should be down there. But I'm not really too worried about this until we clear relative equal lows. Because now that structure coincides with this liquidity, I can aim for this liquidity. It's until then that I cannot. But yeah, if we do take these relative equal lows, we would be taking out the entire shift of character 1, character 2. So I do see this, if we do continue lower, that we will continue lower. But yeah, with that being said, do you guys have any questions? Also, let's not forget NFP is this week too. First week of the month. It should be very interesting. But yeah, does anybody have any questions? When you're, let me see AU, when you're in. Nah, bro. Honestly, most of the time I don't, unless the direction is certain, right? Because I want clarity in order to judge a risk. Yeah, like for example, I could have easily tried to play, just based on an overall scale, I could have tried to play this. And I could have tried to play inside of here, and essentially waited for not only the continuation BOS, but the potential inefficiency disruption, and then tried to take a trade here. But now the issue with that is this POI is taken out by this, which is why I said it's technically bearish. And because time and time again, I have seen this try to create the pullback and then fail. Right? So it's a bit tricky for me to judge that, because if this bearish structural range is intact, then this is an overall liquidity grab, excuse that line. This is an overall liquidity grab, and this should realistically be going downward. But that's only from looking at it from a minor intraday perspective. When you're looking at this from more of a major intraday perspective, right, we could see this as a break of structure, continuation to the upsides, but they aren't in harmony. So because they aren't in harmony together, it's a bit tough for me to make a judgment. That makes sense. Because don't get me wrong, like I do want this to be bullish. I do want this to be bullish because there's so much potential. Because there's so much potential to even come back into this high, right? But the thing is like I said, these transitions, these bigger time frame transitions, they take so much time. So why try to rush and try to catch the bottom when I could just continue structure, continue order flow, to then only change my bias once it's shown its hand. You see what I mean? So it's just trying to be rational with what directional bias I have. That's all that matters to me. And I mean, these closures could be signs. So let's see. Honestly, this week though, I do see this continuing higher. Yeah, you see NFP this week. NFP this week. We'll see. Yeah, that's literally the only reason why I'm not touching it, is just because we're stuck in the range. When we're stuck in the range, even though we're still bearish, right? This is technically where you, from an opportunity perspective, this is where you catch those bigger, time frame trades. But the only thing is that you are technically counter trend. So the only reason why I would look for a long is because I'm still short from the highs. So but yeah, we'll see. We'll see. I would definitely love to see this clear highs and then give us a true bias, but let's see. So does anybody have any questions? You switch to GU. Let's see. How about you do AJ instead, and you can share your screen. Yeah, What about that?
Can you hear me?
Yes.
How do I share my screen? Here. Okay, right.
Let Ash finish his explanation first, please.
Hey Fredo, can you hear
Yes.
me?
Yeah.
Yes. So with this arrow, I'm pointing that this does not this does not went till premium and continue downwards. But today it took this daily liquidity. This was previous day's high,
Mm-hmm.
and then it actually broke the structure to the upside. If we see the internal range of this this high low pullback and this continuation, but
Mm-hmm.
it broke the structure here. So it's still after taking the liquidity, it's still continuing to the downside.
Mm-hmm.
So why is that? Why is like that? Because I was expecting a push up because of the structure break here.
So let me show you something. Okay, cool. Thank you. So remember that I said with ranges that just as easily as we convert one way, we can convert the other way, because that's the escape of a liquidity grab, that's the escape of a break of structure, blah blah blah. So I'm looking at liquidity grab to the downside, bearish structural range, pullback. Right now, this is a bullish liquidity grab because we even take out this level of structure, but there is still this mitigation in play, although this mitigation is also in play, right? So this is bullish, but we have a bearish mitigation in play, and this bearish mitigation, if we zoom in, took intraday structure. So because we take intraday structure, this is still technically bearish, unless, in my opinion, we take this high out, right? So this is your make it or break it point. Not necessarily meaning sell here to the downside, but more so if this reaction is intact, then I have a bearish bias. But if that does not, or if it does not react from there and we break, then cool, I am now bullish. Does that make sense?
Yeah. Yes.
So it's
And when you say the break of preliminary structure, so what do you mean by that? Like
you can see a
I
solidified low right there. You can see solidified low right here. Preliminary
when
structure
this
one,
got
preliminary
broke,
structure two.
okay. So when this point got broke, so I was bearish.
Uh-huh.
But you pointed this point. Why is like that?
It doesn't, it's the same thing. It serves the same purpose.
Okay, okay, okay.
So this is preliminary structure one, preliminary structure two, full leg break. Because this is one leg. So it doesn't necessarily matter. It serves the same purpose. Right? Because if we break this preliminary structure, then we've obviously broke this preliminary structure.
Yes.
Okay, so now it's a bit weird because look at this H4 closure, but look at this preliminary structure here. So from this perspective, it is bearish, but from the perspective of H4 closures, this looks like a rejection. You see what I mean?
Yes.
So if I had to make a rational bias here, I would ignore my M5 analysis and I would care more so for zooming out. And what do I see? Structural range to the upside, right? I see mitigation, even based on this wick here. And I see a bullish break of structure. So now I would need, even though we had the preliminary structure, I would need a conversion so that I can then want to take it higher. That's the only rational perspective that I have, that I probably would not like the bearish bias unless we take this out. Because I want clarity. Cool. Hope that makes sense.
Yeah, thanks.
Okay, so let's see. Let's see if you wanted to look at AJ.
Do you want me to share screen or?
I mean, yeah, if you want to look, I don't have any bias on AJ.
Okay.
And it's not a pair trade, so I don't really want to.
Oh,
So show me what you want to. Or show me what you were seeing.
I don't know, it's asking allow Zoom to share open system preferences. I think something is wrong with my system. It's not allowing to share.
Are you on
screen.
your computer?
Yes. Sorry?
And what does it say?
It's asking to open system preferences.
Oh,
So
that's probably
probably-
because you don't allow your computer to share screen. So you have to
Okay.
change that. So you have to go to system settings. I don't know what that is.
Can I share the screenshot and then?
Yeah, you can. Yeah, let's just do that instead.
Yeah. Okay. And
You can send them on Discord if you want.
okay, I put it here.
Or you could put it in the chat too. That's cool.
Yeah.
Okay. Okay. So what are we seeing? What are we acknowledging?
So technically, still bearish. These blue lines are like daily structural points, and those are coinciding with the 4-hour as well, the intraday one. But the one, the POI I marked was, the potential to reverse it, because this is reacting from the weekly, the point of interest, the one bullish reaction had. But what I was seeing is like, if you see that these two orange, the pink lines, they are the immediate structural range. If those broke, then I think we're gonna long for quite a bit, a month or kind of stuff.
But here is the thing too. Look at this. That's alerting. This is because, for example, I'm seeing this mitigation led to the downside move. So this is a turbulence point. This turbulence point has now created a reaction, but this is taking so much effort to want to come lower. So now that you've acknowledged this could easily be a sign of change of bias because of solidified points. So this could, if we have a bullish liquidity grab here, then this could be seen as unwillingness based on high, low, retracement, unwillingness, and there's any type of break there, and you now have a very high potential swing.
Right. So that's a potential higher low. Sorry. Higher.
Sorry.
Lower high, right? So that's in play at the moment.
But you have to show me like inside of there in order to try to solidify that. But this reaction is very key.
Yeah. Okay.
Because you can even see the construction being built here, the construction of order flow. You could see 1 mitigation, 2 mitigation, strong reaction. So now if you have any type of minor intraday pushes in the smaller time frame, then you now have a bias to play off of, and that's how you realistically catch a bottom.
So at the moment, like taking a trade from the mark POI is like guessing a low, yeah.
So if you were to try to take it from here, is that what you mean? Try to take it from here, then you need a smaller time frame reaction. I mean, you need a smaller time frame reaction based on whatever model you want to use. Is that considered counter trend? Yes, but is it a bad habit or a bad type of scenario? No, because at the end of the day, you're looking at a potential bigger picture move, right? And if that's what you're looking for and that's what you get, then that is, in my opinion, a good thing.
Let's say, for example, like, I was in trade from the beginning, the green POI. Is it justified to take a hedge from here, and whichever way it goes?
Yeah, because you had your sell here, right?
Yeah.
So yeah, then 100%. That's a great scenario. Was there anything on smaller time frame there?
Okay, let me share the smaller time frame screenshot as well. I just pasted there in the chat group as well.
Oh, okay, yeah, you see it right here. You see it right there. Yeah, you see that right there. Now, what happened here? Let's analyze what happened here, and let's see what is a realistic entry for you.
Yeah, there was a 1 minute, but I generally take a 1 minute entry after 2 break of structure.
After the reversal BOS on a scalp time frame, right? Is that what you mean?
Yeah.
Okay.
Yes, reversal BOS. I mean, 2 break of structure, solidified high. And then
I see what you mean.
The mitigation play. Right?
Yeah, I see what you mean.
So that didn't. I mean, I didn't get a chance because it was too quick there, so didn't took it.
This is a perfect example of what I showed y'all with what I said, where we wanted to pull back, and then you see bearish structural range, and then you see continuation. That's a great example. But can we zoom in here?
Yeah.
And then see what you see. Yeah, this is a great example of what I was talking about earlier.
Yeah, I just pasted there.
Okay, let's see. Okay, cool. So realistically, this is not an entry, right? Unless you wanted to take a potential inefficiency with point of invalidation at the low. That's the only way, but this would be a 100% reversal trade, and the only way you're taking it is continuation BOS momentum, which is not as reliable because you see that all the time. But once we see unwillingness, break of structure, then now we can start to make a play, whether you wanted to take the inefficiency, or if you wanted to wait for that and you wanted to take this mitigation, or right, I'm pretty sure this is the M2 candle here, and that is there. So it's a bit sloppy, right?
Yeah.
And even here is another potential entry. It just depends on how far you're willing to pursue the trade. I don't want to say chase, but pursue the trade. Because realistically, for me, if I'm wanting to be conservative, the only entry that makes sense is here.
Okay.
If I'm wanting to be super conservative, right? If I'm wanting to be aggressive, then I would say here. Right? But the reason why I say here is I like that.
Right.
I like that we created a potential liquidity grab scenario, right? Which created then a new high. So this is a low, high retracement, continuation, right? This is a type of unwillingness, a type of potential, a sign of bearishness that failed, right? Pretty much a failed move, right? Or, you know, the pretty word these days is inducement, but I don't want to say that.
So isn't it too high to buy from the one you marked in the, like?
Are you talking about this one?
Yeah.
But why?
I mean the discount and the stuff, the range from the.
Well, the only reason why this POI would make sense is because, let's see if I can zoom in. Oops. The only reason why this is attractive to me is because there's a very clear POI for one. Two, this is all efficient then inefficient, right? That's the character version. And the fact that we created these scalp breaks of structure after taking liquidity shows to me that we wanted to push lower, right? Hence why you even had the unwillingness here. So because this wanted to push lower, but then didn't, and then it had a bullish liquidity grab, and then a continuation, this is my solidified low, right? This is not my solidified high, but after that, push to the downside. But because there is a POI here, this is I would promise you this is a turbulence point on smaller time frame, on a seconds time frame.
Right. Yeah.
So does that make sense? Because we had a willingness to want to come lower here, but then it failed and it gave us a bullish move. That gives me a sign of showing its hand.
I see. Sometimes it does, you know, it goes into premium and then goes up. So I just kind of skeptic to enter on the too high, you know, just after the break of structure. But yeah, it makes sense if you have the structure range in play. Yeah.
Have I made any type of content on this type of scenario? I know we've seen it a lot of. We've pointed it out a lot of times, but I don't know if I've made anything like this, like a video surrounding this.
I don't remember.
I don't know. Does
Probably.
anybody
Let's
know
check
if
it
I
out.
have? Because I have a cool name for it if we don't. I know I haven't made a specific video, but I don't know if this is something that you guys would want. Because this is something that I see. This is something that's you can easily make a model around.
Right.
So the way that I see this, right, is like from a liquidity perspective, this gave us signs of bearishness, but then failed. What is that? Yeah, two potential LGs. It doesn't always have to be an LG here, but it usually is an LG down here. And to me, that is a structural, like, kind of disruption. Because this isn't really liquidity based, I would more so consider it structural based. And it is a disruption because we wanted to push one way, we caused a reaction to one direction, and then led to the other direction.
I see. Yeah.
So that would be more so, I would call that a structural disruption, if that makes sense. But yeah, we'll see.
So one of the rules I made is, like, you know, make a two breakup structure. If the mitigation is in play, so if the point of interest is correct, generally it will never come back. So two breakup structure here is termed as aggressive one when you're trying to take at the from the point of interest first breakup structure, and then second one, is it termed as aggressive one?
No, I wouldn't say so, because do you remember in the order flow video that if we see too many mitigations, it can usually fail? Whereas if you see one mitigation, two mitigation, and we're creating consistent new highs, even a third mitigation, and then we moon, that is considered to me strong order flow. Whereas here, if we keep having mitigations in place, right, it more so looks corrective. So this is where momentum comes into play. Yeah.
I see.
Or you could even see something like this. I'm sorry, not like that. That was a bad drawing. Right, weak order flow here. Because we have 1, 2, 3 mitigations, no new high. Right, so that's that. I would say look more into the order flow side, and I think that will help you a lot.
Yeah. Okay. Thank you. Yeah.
But yeah, this is a good trade. This is a very good trade. I like that. But now this is where it gets tricky. But just keep in mind that any risk you take, you can be conservative. Like, for example, point of invalidation. If you're taking an entry off of here, point of invalidation. If you're taking an entry off of here, point of invalidation. Right? So with your hedges, you can be more conservative, and you know you're going to win both ways. So now, even if the R for the hedge isn't that good, a win is a win, and you've already partialed out from your original position, so a win's a win.
Yeah, makes sense.
Yeah. So yeah, that was a good trade. I like that. Cool. So any more questions? Or May 21st, we talked about something similar. Yeah, I think I should make a video on it. I think I should. Let me let's see. Let me actually go here so I can remind myself to do it. Oh. Too small. And if I don't make it, like, within the next week and a half, just someone tell me about it, and I'll remember to do that. Let me just mark it out and show a chart. Yeah, see, 30-second candle. 30-second candle. But let me just mark this out for you. And I'll try to make a video on it soon. Because this is something we see, actually, I honestly, I see it a lot. I don't know about you guys, but I see this a lot.
Right, yeah.
Yeah, I don't know if I'm gonna name it this, but we'll just keep it at this. But yeah,
And
let's see.
2LG means, yeah, I mean, generally the structural disruption, yeah.
Mm-hmm. And this is also why I emphasize playing the immediate range, because you can see the immediate range was bullish. And so this itself can be a model. If you really pay attention to this itself could be a type of model. Because if you see this anywhere else, I promise you, it's probably going to play the same way that it's playing out right now. Because even if this does not sustain itself and ends up falling, you're 20 pips in the profit. You're easily a partial out or at least break even.
Mm-hmm. Yeah.
But yes, this is good. Let me actually do this. There we go. And if why is that? No. Okay, let's see. All right, so with that being said, are we good, or do you guys have any more questions? Yeah, 1 to 10, easy. Oh, 100, look at this. Yeah, easy. If we're taking it based on that endpoint invalidation, that's a bit under 3 pips. If you're being aggressive, it'd be 2.2. That's already, yeah, easy 10 to 1. 1 to 8. And the thing is, though, is this has potential. You see what I mean? Because this, right, it does, if we come back down here, oops, if we come back down here, then this entire bias is wrong. The entire bias is wrong, which is why realistically, even if this isn't the bottom, this is giving me a model that's giving me sign of bullishness. Why? Because we wanted to convert, then we convert it again, right? Just as easily as we convert one way, we convert the other way. And that emphasizes the direction for me, which is why that to me is a way of showing a 10. And I mean, look, if we break structure from there, this is how you get these massive swing trades, as we were just mentioning right now. Because this easily could turn 130, 1 to 40, 1 to 50, right? And that's already 176 pips, right? No, not 100. Yeah, 100. Yeah, something like that. 176. And 176 pips on any lot is a lot of money. But yeah, with that being said, that was a good example. Good thing we got that in place, and now I can make more content. Excuse me. The only videos I know that I have ideas for is I have a social media one and I have now this one. So I'll try to get them done hopefully by the end of the week. If not, just start spamming my DM and I'll do it.
Yeah, thanks, Pedro.
Of course. So I will see you guys on Friday. Cool. Cool. I'll see you guys on Friday.